Welcome back to Stocklabs for another market recap. We have just about finished October. It's a Halloween weekend, so hope everybody's having fun with that. Past week was another lackluster one for markets. Mostly they trended down for the entire week. We had the Dow was down 2%, S&P was down 2.5%, small caps down 2.5%, and the Qs were also down 2.5%, a little worse. Crude oil was down 3%. Gold was up almost 1.5%. And bonds actually had an up week, up 136 basis points. So, the rare up week for bonds. Really no life from the bulls this week again. I mean, kind of just, market has kind of laid down here and just, you see these days where just nothing is bid. I mean, the volatility hasn't spiked that dramatically, but you're not seeing hardly any upticks. Market goes down for hours on end, just sort of trickling down. It's really just not you're not seeing the bulls assert themselves at all. They're kind of just taking the lower prices and accepting them. For our mega caps or our like Magnificent Seven stocks, as they've come to be named. We had a couple of them report earnings this week. Amazon reported and did pretty well, and Google got hosed, down 10% for the week. I think we also had Microsoft reported they were up on the day, but then they ended up giving back a lot of the gains in the following sessions. But as far as how the results looked, they looked pretty good. So, and I think Apple is coming up, so this should round out. Actually, I don't know if NVIDIA, what their reporting schedule was, but anyway, I think most people are looking forward to Apple. I think expectations for this past quarter or for this report are kind of on the low side. More or less, iPhone 15 cycle has not really been like that inspiring for people. I mean, it's the same story. Apple hasn't really put out, had new exciting products for a long time. But I mean, it is what it is. I mean, the thing is massive. They sell billions of dollars worth of, just AirPods, for example. But I mean, it's whatever. So people will be looking for Apple since it's the largest of the weightings in the S&P and the Qs. I mean, overall, I would say this group reported pretty well. Especially you see something like Amazon, you see Microsoft. I mean, Google was soft on the cloud and everything, but they're kind of the third, or like they're sort of like second tier cloud, as opposed to like AWS and Azure from Microsoft and Amazon. So yeah, I mean, overall, I say the results were good enough for now. Nothing too special, but nothing that would cause you to think that anything is drastically different than it has been for a while. So if we look at breadth by industry, negative across the board. Healthcare, big loser, down 5% on a median basis. Tech, not far behind, down 3.3%. So tech, this is worse than what the NASDAQ was. NASDAQ was down 2.5%. Median tech stock was down almost 3.5%. So you see weakness beyond, you see weakness under the surface as well, not just the stuff that's dragging the indices around. Services down 3%. Consumer down 2.75%. Basic materials down 2.6%. Utilities flat-ish. I'm seeing sort of a thesis develop, like investors are sort of thinking that rates have more or less peaked. I mean, maybe there's another hike, maybe not, or whatever, but long-term expectations of rates is not going to be much higher than where it is now. So you might see some rotation back into utilities. Especially if people are preferring more defensive sectors in the market. So we'll keep an eye on that. I mean, they were flat this week, but you know, that's better than what they have been for the last several months. So it's just something, could be at an inflection point for utilities. Um, if we look at subsectors, nothing up over 5%. Actually, we only even had about this is like 15 sectors that were even green subsectors. So really weak breadth. On the downside, a lot of the spec stuff is getting hit the hardest again. So a lot of these companies are unprofitable. They're reacting to a rates environment where it's going to be tough for them to raise additional funding it'll be tough for them to raise it at least at favorable prices. Let's say that. So their equity is getting hit hard. We only had 27 sectors that were down over 5%. So, you're not really seeing like a giant washout. Even though the market has been so weak for, the last at least 2 weeks, even going back, the last 2 weeks have been particularly weak, but you even look at since midsummer, a lot of these stocks have been trending downwards. So, it's a bad spot for a lot of the market, even though the major indices like, S&P and the NASDAQ, they've only just started to sort of crack a little bit in the last couple weeks, getting into a bit of correction territory. If we look at breadth by market cap, just to sort these, got 1 to 5 billion cap stocks down 2.6%, more or less in line with the Russell. 10 to 50 billion. Oh, sorry. What did I click on? 1 to 5 billion was, 2.32%. Again, this is in line with the Russell. 5 to 10 billion, like I said, 2.6%, same thing. 10 to 50 billion was down 2%, slightly better than S&P and NASDAQ. 50 to 100 billion, down 2%. Again, slightly better. And 100 billion cap plus stocks down 2.25%, more or less in line with the S&P and NASDAQ. So you can see up and down the cap spectrum, whether we're at billion-dollar stocks or 100 billion plus cap stocks, they were all down over 2% for the week. So actually very uniform sell-off from that standpoint. That tends to not mark a bottom, but it tends to show you that the market is, everything's moving as one. The correlations, they all, there's no dispersion in the market. Everything kind of moves up and down together. This happens, more or less around the time where you're trying to hammer out some kind of bottom. But right now, we don't have any other sort of indication that that's something that's happening. Stocklabs has been saying the market is oversold. We had these signals cluster around here. The last few weeks, we don't have another one from the end of this week, but I would say that the market is past due for at least a sort of relief rally, and these rallies tend to be pretty swift. Whereas, you might see like 400 points up on the NASDAQ one day and then like 300 points up on the NASDAQ the next day and, go from there. But all of that is just speculation at this point. Everything basically closed on the lows for the week, or near the lows for the week. So we'll be on the lookout for that. I think this week, like I mentioned, we have Apple, and we also have a Federal Reserve FOMC meeting with Jerome to hold another press conference on Wednesday. I don't really think you're going to get anything new out of the Fed. To me, Jerome has kind of been singing the same tune for a long time, like months, even going back to last year. You're hearing a lot of the same language, but the market reactions have been varied. So, who's to say what's going to happen on that day. I think last few meetings, market got hammered. But yeah, we'll see. I think at the very least, you're going to get a choppy opening to the week into the Fed meeting. My bias would be that, regardless of what happens with the Federal Reserve, you're going to see the relief bounce come in this week at some point. So, and whether it's able to extend past, a couple of days, that remains to be seen. But I'd be very surprised if, you have another week like the last 2 weeks again this week. So we'll see how it goes. Hope everybody has happy and safe Halloween, and good luck in your trading this week. We'll be back next week to see how everything went. All right. Talk to you later. Bye.